All right, everyone. Good evening. My name is DF Basy, and welcome to my YouTube channel. If you're not subscribed, you can kindly subscribe and click on the like button to like this video, that it can also push to more viewers. So today's class, we are talking about liquidity, talking about algo structure. I'm talking about liquidity and algo structure. So basically, what is liquidity? Liquidity is a pool of resting orders, stop loss, and pending orders above highs and below lows. So if you watch the video on order blocks, you can know what an order block is. Another block is a block where there are orders, plenty orders from clustered orders, where the institutional traders, the banks, place their orders at. So at that point is called an order block. So liquidity resting is a pool of resting orders. So now this liquidity most times is usually below an order block. Majority of the times below another block, more or most times above another block. So that's why you can find them above highs and below lows. It's considered engineered targets where institutions move price to facilitate large order execution without slippage. Liquidity is used to create displacement, confirm manipulation, sweep, and define the true directional bias of the market. So with your understanding, the basic understanding of liquidity, you can use liquidity to define the true directional bias of the market. Now, liquidity is very, very important in the forex market, in any market, crypto B, crypto stocks, forex. Why? Because you use liquidity. Liquidity is what fuels the market. It's like a fuel for the market, right? So liquidity is fuel for the market. Without liquidity, the market can move. So now in your pure economics, can can say liquidity is basically funds, cash put into a business or to the market, whatever way. But now in trading now, in advance, because we're talking about advanced terms now, trading now, you need liquidity, right, to move the market. So now mostly what the big banks do, they take out liquidity. They look for liquidity points where orders are. To take out those points, hit your SL, take it as liquidity, your stop loss as liquidity, then before going direction. So now those are stop loss, all those points, targets you're setting as stop loss. That's those are like those are little how will I put it? Those are little cash, little money. Those are money that for all those your $5, $10. So imagine you have like 20 or 30,000 traders setting their stop loss there at $5. Then you have 100,000 setting their stop loss at a particular point at $10,000, $20,000. Once the institution comes to take out those stop loss before moving to the should have taken enough capital that can fuel the market. So if you understand demand and supply, once you take your stop loss, it adds to the market. If you understand how the basic forex trading works, the quote versus the base currency or the base currency versus the quote. So it adds up to either which side you're trading, or if you're selling or buying against which other side. So it adds up to that side and force the market to either buy or sell. So now let me draw what a market structure looks like. Now on a normal base, this is what a market structure looks like. You have this. You have a low, you have a break of structure to the upside, you have a higher low, break of structure to the upside, you have a higher low, then a break of structure to the upside. So this is what the Bible version of a candlestick pattern of a market structure looks like. Where you have your break of structures to the upside, you have your break of structures to the upside, you have a break of structures to the upside. So while all of this is true, while all of this is true, market now let me also add as market is breaking structure is coming back to bounce at what other blocks. I showed you guys what other blocks are. coming back to bounce at other blocks to buy. Practically, there'll be another block there and other block here. So while this is very, it's the Bible version of a market structure, right? This is a Bible version of the market structure. But in clear terms, what really happens if you go to your chart, this is what happened. Market goes up, comes down, creates a higher low, creates a higher low. I don't know if you guys can hear me, but my internet connection is unstable. But creates a higher low, break structure again to the upside. Now you might think it's coming to respect this point. It comes back, take out this point, this higher low, start taking it out, then buys back again, break structure again, comes back. You might think it's coming back to take out this low again, but no, it doesn't. Comes back, creates another higher low, break structure. You think it's coming back to respect this other block that is here, the higher low. It takes out the higher low, break structure to the upside, and from there it continues the sequence like that. So now, in most scenarios, you'll be marking out as at this, what is shown here, that was shown here. You'll be marking out these points as what other block, as other block. You're marking out points as other block, marking out this point as other block, marking out here as an other block too. So now, let's say you were to take it by while all this was happening, the market was breaking structure to the upside, breaking structure to the upside, break up structure to the upside, and that break structure to the upside, continuous break structure to the upside, and break structure to the upside. Now, while all of this was happening, the market was still breaking structure to the upside. So still confirming that the overall trend of this guy is what bullish. It's a bullish trend. But now we might say, why is market not respecting this other block here? Why did market have to sweep? Because you can check closely, market swept that other block, swept the other block. If you can check here again, it was supposed to tap. It was supposed to tap here. Once it taps, it buys, but that didn't happen. What happened is it swept there again. It also swept here. So now let's say you were following this basis, yeah, this normal basis that once market comes, it taps the other block and buys. So naturally, this is where your buy limit is supposed to be, and your SL is supposed to be below the low, and your target is probably 1:3. But let's say you're targeting the next high, then let me clone this, and you do the same thing for here, and do the same thing here. So now with this, you will see that market will hit your stop loss. See here, let me zoom closer so you can see. Okay. So with this, now you can see that market will be hitting your stop loss at this point. Here you hit your stop loss. Here you hit your stop loss, and over here too you hit your stop loss. So now what happens here? What happened? Why did this other block fail? Why did this other block fail? Why this other block fail? And why did market choose to move from this other block here that was below this other block and this other one, this other block over here? Why did market choose to respect this other block here and buy from it? So it's simply because market swept liquidity. Market swept liquidity before buy. So now if you look closely, look up. Now you look closely. I don't know whose mic is on. Please mute yourself. I'm hearing background voices. So now, if I want to mark out all of this, this block here that was supposed to be my other block turned out to be liquidity for the market. Says the liquidity market swept, tapped, but this other block here, So that guy here, that was supposed to be another block here. Supposed to be another block here. I was supposed to hold price to buy back up to break structure here. They didn't hold price, but instead market used it as liquidity. Somebody's mic is on. Please mute yourself. Market used this as liquidity. About second, please mute yourself, please. Then this other block that was meant to be respected, this other block, market swept it, right? Turned out to be our liquidity. So I don't know if you guys have been looking at other people's charts and you see them mark this X, and this. That is basically liquidity. Market sweeping out liquidity before buying, giving out liquidity before buying. So now with this is how the market moves. This is, if you open your chart, you see this. This is the basic market structure where you have the what? You have the breaker structure. You have the BOS. You have the normal, the regular BOS here. You have the BOS here. You have the BOS here. But then you also have your what? Your other block. You also have your other block here, here, and here. And the market just keeps on breaking structure to the upside. This is the scenario of a bullish market. You know, when market is breaking structure to the upside, there is a bullish market, right? It's creating a series of what? Higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. I don't need to go back to all of that because I taught you guys all of that. So with that basic understanding, looking at this, market is creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. But the key difference is this: market is not respecting every other block like this. It sweeps some other block, but respects some. Why does it respect some? Because it sweeps some as liquidity. Most people want to buy from there, but to sweep it as liquidity, tap the nearest other block, then buy. Remember, there are certain scenarios that you need to check before an other block is valid, right? There are certain scenarios you need to check. You need your bullish engulfing and your fair value gap, the Bible version. Although outside that, you can still mark that. You can still mark your other block with if you can indicate where market is coming from and indicate your bearish and bullish candle. So now we are going advanced. I don't know why some of you haven't joined. We are going advanced now. So with this is the basic knowledge of how the market moves. Liquidity, market sweeps liquidity. So now if you notice, market sweeps liquidity, tapped here, bounced back, or broke structure, came here, created this guy, bounced back up. Instead of respecting this guy, I swept this guy liquidity, bounced back up, kept moving. So now with the definition of liquidity, you can understand that liquidity is a pool of resting orders, stop loss, or penny orders above highs or lows. It's considered as engineered targets where institutions move price to facilitate large order execution without slippage. Liquidity is used to create this displacement, confirm manipulation, sweep, and define the true directional bias of the market. So now explain liquidity for you. This is this is just basically how the structure works, how it looks like. I'll go to chat and identify it, but let me talk about algo structure. So now if you look closely from here, you can even see algo structure. So what is algo structure? Algo structure is basically a structure that has a sweep of a low. Let me include that. A sweep below, a sweep of a low or high. Then it also needs to have a double break, and it also needs to have a what? It also needs to have liquidity, and it also needs to have a protected low. Do you understand? It needs to have a sip of a low or high. It needs to have a double break. Yes, it needs to have a liquidity protected low. So what's the meaning of a double break? A double break is simple. When market breaks structure, it broke structure the first time, broke structure, came back down, broke structure the second time. It's a double break, right? It needs to have a double break. Most times, let me put it, okay, let me change it to triple. I need to see double break or, yeah, a double break. It's double break, yeah, the double break. If market break structure the first time, second time, come back, create liquidity. So it's a double break. So now let me show you how algo structure looks like. Now, what I basically trade is algo structure. This is it. Simply this, 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 this. So this is an algo structure. So before I started, I told you guys that the only way you can understand algo structure is if you know how to identify head and shoulder patterns. So basically, this is an algo structure. Now, if you can look at it closely, it looks like a head and shoulder pattern. Why? Because you have your what? You have your head over here. You have your shoulders. But basically, this is your right shoulder, and this will be your left shoulder, right? So it looks like head and shoulder pattern. Now, this algo structure, why I said it needs to have two breaker structures. This is where the breaker structure comes in. You have a breaker structure over here, a first breaker structure, then you have the second breaker structure. So you have the first breaker structure, market coming break structure again, the third time for going in. Now, mostly, like what I explained, what we'll be looking for, they're looking at this other block to buy. But now, what will market do? Market will come back and take out this other block and tap here and then buy. Why will market take out this other block? They take out this other block as what? As liquidity. Take out this other block as liquidity. Once it takes out this other block as liquidity, so tap at this other block over here and then buy. So this is basically algo structure. So now in algo structure, we have like two, three types. Okay, so then, lest I forget, this is important. Market has to sweep a low. So this, let's say this low is formally a liquidity that is swept. It has to sweep a formal liquidity for an order block to be valid, a protected low for a protected low to be valid, it needs to sweep a previous low or high. They say, so now remember the first things I said, this is second BOS. You know, BOS stands for break of structure. So this is the first BOS. This is the first BOS, this is the second BOS. Then this is your this is your protected low. This is the protected low. Why is this guy protected? Because as market has swept structure, as market has swept liquidity, hope you guys are paying attention because this is very, very important. As market has swept liquidity here, this guy is protected in most scenarios, in most cases. Now remember, as a trader, you're speculating price movement. You might speculate the price movement and market might violate it, but most times this is a scenario that works, right? So market has swept liquidity, and this guy, this particular low here, this particular low, right, has swept a previous low. Has swept a previous low. So now this guy is protected because they have swept the previous low and there's a liquidity resting above this guy. The market can sweep that liquidity, bounce here, and then buy. So very you can keep your limit here, your buying limit over here. Keep your SL a bit. Target one is nowadays, I don't know if you see my post on the Telegram, but I target 1 to 3. So, but if you want to target a next break of structure, all fine. And it works like that. This is basically what I trade. And if you go to the Telegram, you can see it. This is basically what I trade. I'm having unstable internet connections. I don't know how, but this is basically what I trade. This is the basis of what I trade. So now let me explain it again. Let me explain it again. So I haven't finished marking out this first BOS, second BOS. What again do we say? Need to have the liquidity. That's the liquidity. That's the liquidity over there. Um, that's the liquidity, protected low, double break of structure. Then what again did I say it needs to have? Let me go back and confirm. As a sweep, double break liquidity protected low, sweep of high or low. So where is the sweep of high or low? This is the sweep over here. This is where the sweep happens. It swept this guy. So this is the sweep. So now with all of this, it has everything you checkmate for. Sweep, double break of structure. For this first break of structure, the second break of structure, you have a protected low. You have a liquidity resting above that protected low. Right? Now this is the basis of it. We are getting advanced now. This is the basis of the advanced version. This is what I trade. Now, to certify every setup, there are certain things I need to add over. So now we need to add our Fibonacci tool. I mean, if you're confident with the Fibonacci tool, but this is the Fibonacci tool. So the 50%, I use the 50% Fibonacci. That's 50%, that's equal. It's just basically say a rectangle divided into two. So anyhow you draw this tool, it divides any point, like from this point to this point, it divided equally by 50 by 50. That's 50 here, 50 here, 50% here, 50% here. Do you understand? So it divides any price from this price to this price has been divided by 50. So now using the Fibonacci tool, okay, I'll go into that in depth later on. Let's say in our next class. But from here to here, for this liquidity to be valid, it needs to be below 50%. Now this is 50%. Where is the 50%? If you look closely, this is the line that draws the 50% over here. So now it needs to be, that's the line that draws the 50% if you look closely. So now this liquidity needs to be below or inside this 50% if I'm looking to buy. If I'm looking to sell, I'm looking to sell the same thing vice versa. If I'm looking to sell, right? This is a structure, break a structure to the downside, break a structure to the downside, comes back or respects this protected low and then sell. So now this is basically what I trade. If you go to the Telegram channel, you'll see this kind of markup exactly like this, right? So now understanding this is basically your algo structure. So that this is the type 1 setup. This is type 1 setup. And let me show you the type 2 setup. Let me drop below it. The type 2 setup. This is basically a type 2 setup. One, two, three. Then, sorry. In the type 2 setup, now you will notice the big difference between this guy and the other guy. Look closely. There's a big difference. And what's the difference? This liquidity here broke structure. Or this other guy, this liquidity here. This liquidity here didn't break structure. Didn't break this structure. It's supposed to break here. That's supposed to give us a double break. So in this scenario, we only have one break of structure, right? But we have this, then the type 3 setup is basically like this. Then we have this, we have this, and we have this. So these are type 3 setup. Hope you're following closely. I don't even know how many people is online. I'm not even going to check. But however, those who not even did might check first so that in case I want to answer questions, I will know who will be attending class. Only one person. Is it one or two? Let me check. Only one person. Fine. So it's IT that one. It's only item we're attending to. We should ask questions on this. So basically, this is the type, this is the type 2, this is the type 3. Now, if you notice, this is the protected low, the protected low over here. This is the protected low over here. Now, if you look at them, they have something in common. What do they have in common? They have the sweep. They have the sweep over here. They have the sweep. They both have the sweep. But now they don't have double breakup structure like this guy. Right? They don't have the double breakup structure like this guy over here. Double break, the double break. They don't have that double breakup structure like that guy over there. This one just has one breakup structure, one breakup structure. And now the difference between this guy over here, between this guy and this guy, and the similarities between this guy and this guy is that what this liquidity here, if you check this guy, this liquidity that was formed here, broke structure, broke structure. The liquidity over here, this liquidity over here, broke structure. See it broke structure to the upside. But this guy, the liquidity here is only this protected low. This protected low that broke structure. The liquidity didn't break structure. So now what happens in this scenario? This scenario is most times is a low probability setup. For me, this is a type 3 setup, the low probability setup, but it plays out sometimes. So what basically happens is this market does this. So this guy has, people call it engineered liquidity. It sweeps it like this, and then you have a breaker structure to the upside. You now finally have a BOS. Yes, that's basically breaker structure. So it sweeps this guy as what? Liquidity. When we're getting really intense, I don't know why they didn't join. I won't be answering questions from them. So this is it. It sweeps this guy's liquidity, and people call this engineer liquidity, but this is a type 3 setup for me. It's type 3 setup. Most times it doesn't, you can see it occurs, but the high chance of it, the high chances of market tapping this zone and buying is always low most times. So now this is the type 3 setup, the type 2 setup. What happens here in the type 2 setup? If you look closely, what market do? From what we know, market will do this to sweep this guy's liquidity, tap here, and still break structure to the upside. Have a break structure to the upside over here. Have a BOS, then sweeps this guy as liquidity. Right? The sweeps guy has liquidity. So what you're looking for, I mean, this is because breaking structure to the upside. So this is now a bullish trend because it's breaking. Remember, this is a bullish trend. You know how to identify trends now. You don't need to start going into that. So this is an uptrend now. This is a bullish trend. So okay, it's breaking structure to the upside. So with this, you know that you're looking for. Sorry, I don't really know what's wrong with my network. So let's continue. Hope you are there. Is my screen being shared? God of mercy. Hold on. Can you see my screen? Hope you can see my screen. You don't know what's wrong with the network.
I can see your screen.
Okay. All right. So this is the type 3, then this is the type 2 setup. So now, basis of identifying this setup, we have 10 minutes for the Zoom. And So basics of identifying this setup is basically going to the chart to look for when market has swept this structure, swept the liquidity. You have the protected, you need to find the sweep. Then you need to find your liquidity either is in the type 1 setup or you're looking for it in the type. You can identify the type 2 setup or basically the type 2 setup, but I don't really trade this guy, the type 3 setup. I basically focus on this 2, 1, and 2, right? So now with this, you can know that this is, remember I showed you these are the basic market structure looks like, but in reality, what really happens is this market does this break structure to the upside. It sweeps liquidity while breaking structure to the upside, right? So let me go to okay, let me end the call, then we'll continue on Telegram, right? Continue on Telegram so I can have Q and A session. All right, so I've recorded this, so I'll drop it on the drive link so that anyone that needs it can access it. But I'll only take questions from you though.